Hello and welcome everyone to today's metals price forecast for the 4th of July 2018, presented by myself, Phil Carr, at the Gold and Silver Club. So today we're going to be looking at the prices of gold, silver and platinum and some of the trade opportunities that we see setting up at the moment. So today, being the 4th of July, is Independence Day, which is a bank holiday in America. As such, one of the major news items which is normally scheduled on a Wednesday, which is the minutes of the FOMC statement, is instead going to be on Thursday at 7 o'clock London time. And on Friday, we also have non-farm payroll. So just be aware that those two news items, Thursday's minutes of the FOMC due out at 7 o'clock London time, and Friday's non-farm payroll due out at 1:30 London time, can have a big impact on precious metal prices and provide some really great trade opportunities as well. So right now, gold is trading at 1 week highs. We saw the dollar yesterday sell off towards the close as we got closer to the US bank holiday, and where we're poised at the moment is very interesting on the metals, with platinum capitulating after revisit back towards $800 per ounce. Today, silver is back above $16 per ounce. We have gold right now trading at $1,255 per ounce after breaking out to $1,260 per ounce earlier on in the session. So we'll move over to the charts and I'll talk you through what we're looking at as we head into the US session today. So essentially, first of all, if we have a look at gold prices here, so gold right now is trading at $1,255 per ounce. What I find interesting is certainly gold yesterday into the closed with a bullish engulfing candle, and we can see where we had a bit of follow through this morning, is pulled back a little bit so far. So we're back more or less at the daily highs from yesterday here. So we're trading at $1,254 per ounce. If we move it over to a weekly chart here for gold, you will see where we're getting a reversal right at the previous swing lows here, going back to the December swing lows where the Federal Reserve increased interest rates. That caused a sell-off on gold where we capitulated from the lows here, where we subsequently then saw a rally back towards $1,360, and we've now corrected all of that move. Gold is actually now negative in 2018. That's not to say that it's going to end the year negative, because it has a lot of potential upside from here once the low is in, and that's really the key question. Is the low in for gold, or is it going to see more downside? So let's have a look at this in terms of the price structure. So on the weekly chart at the moment, it is holding on to $1,237 per ounce. It has found support. Potentially it's a double low, but it's found support here going back to the lows from 7 months ago, and we're bouncing off that level over a 200-point move that we've seen overnight. So of course, on a weekly closing basis, if it holds this price structure and then next week we break back above the weekly highs, we could then start to see a low get formed and a move back towards $1,300 per ounce. So that has potential if gold holds up with this price structure over the course of this week. Again, if we take it back to the daily chart here, you will see where we've got a buy signal actually, which is developed on gold here. We have a bullish engulfing candle into the close. We've found support at the lower Keltner channels as well, which is typically a level where you would anticipate gold to get supported. So it's getting supported where it really should do. If it was to roll over, so let's say gold does not follow through and it continues to break down, and we were to break back below the lows here from Monday and Tuesday, if it breaks back below $1,237 per ounce, the next major level is 1,228. That will be a key zone where you could then see support come in for gold. Now, that's not to say that will happen, because right now we've got a buy signal on gold, which is showing good potential here if we continue to follow through into the US session and into Thursday's minutes of the FOMC statement, in which case, if gold does follow through, it does actually offer some good risk to reward potential at this zone. We would look at the next level resistance at 1270, and then a breakout beyond that zone. I would be looking at follow through, taking the price back towards 1285 to the 1300s over the month of July if it was to continue to base here and if the low is already in. So we need to be watching the price here very closely over the course of this week through the minutes of the FOMC and Friday's non-farm payroll as well. And then we'll move over to some of the correlations. It's been really interesting this week. So if we have a look at at platinum. Platinum capitulated yesterday, so platinum broke down over 600 points and a 5% move to the downside at the beginning of the week as it broke back below $850 and rotated all the way back down to $800 per ounce, and then capitulated with over a 450 point move just yesterday on Tuesday. And now you can see it's getting a bit of support at the moment. It's essentially holding on to those gains. It hasn't given back those gains. The 800 level has been really important on platinum historically. If we have a look at the price of platinum here over the last 20 years, this is a major level of support, and very clearly investors and traders have bought platinum at the 800 level with a bounce off $800 per ounce spot on, and then a reversal which took the price back towards $845. And the last time we saw $800 retested was back in 2016. We've in fact just broken ever so slightly below the 2016 low, which takes us all the way back towards the 2009 low where we retested $800 and just below that. So platinum this week has almost retested the 10-year lows, and then prior to that, the last time we saw $800 retested was back in 2004. But then we saw that tremendous run up from 2004 to 2008, taking the price from $800 all the way up above $2,200 per ounce for platinum. We saw an incredible bull run, and then subsequently over 2008 and 2009, the price broke all the way back down to $800, found support again in 2009 and rallied back towards $1,900. So you can see what an important level $800 is for platinum. And again, from a seasonal point of view, typically the precious metals, they bottom over the month of July. So if we are encountering the lows over this month, it could actually represent a fantastic longer term trade opportunity for platinum if you know what you're doing, if you know how to manage your risk on this trade, and you know how to build into a position here. Certainly if you trade the precious metals, add platinum to your watch list, because right now platinum is trading just above $800 per ounce. Now moving over to the silver chart, into the close on Tuesday, silver did manage to find support at $15.75 per ounce. In fact, this morning it broke back above $16 per ounce, and it is essentially bouncing right off these lower Keltner channels as well. So silver is finding support where you would anticipate it to get supported, and we've been sitting within this range of $17.30 down to just below $16 for quite a while now. So it's really been since approximately February all the way through to July, 4 months where we've seen this consolidation price, and even prior to that, going back to December of 2017, very similar to gold with this respect, where we saw the lows come in around the FOMC statement in mid-December, where the Federal Reserve increased interest rates, and that's where we saw the low get put in here. So we're looking at approximately $15.61 is where the low was put in over December. We came very close to retesting that level earlier on this week, and now we're at a bit of a decision point here for silver. Again, if we go over to the weekly chart, it is finding key support here, and again, from a cyclical point of view, have a look at where the lows tend to come in for silver over the last 2 years. So if we take the price all the way back to June, July of 2016, we put the low in at the end of June, beginning of July in 2016, and then a low in December of 2016, and then in July of 2017 and December of 2017, and then taking the price out to where we are at the moment. We are right at the beginning of July in 2018, and yet again, silver is forming a low for the year here. So I would definitely be watching the precious metals here, because once they do form a low and start to rebound, there's a lot of upside potential, and there's a great risk reward here as well to build positions on the metals once they form a low. You do need a bit more confirmation, and we have a minutes of an FOMC statement which is due out tomorrow on Thursday, and also of course Friday's non-farm payroll. Now we are going to be holding live trading room sessions for all of our traders at the Gold and Silver Club to prepare for both the minutes of the FOMC statement and also Friday's non-farm payrolls, going through the exact trades that we will be taking for those major news items. And of course, if you would like to join us at the Gold and Silver Club and be a part of a community of successful traders, then join us for our live trading room program. As a member of our service, you get access to our live trade alerts via WhatsApp, email and SMS, mentorship, expert advice, in-depth market analysis and trusted insights, so that you can know earlier how to act quicker and maximize on trade opportunities. So for more information and details on how to join the service, please do visit www.goldandsilverclub.com. jointhelivestradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will get in touch with you ASAP. And do make sure you subscribe to our YouTube channel to be kept updated with the latest reports.